2008 was a year of vindication for my guest today, Peter Schiff. He's president of Euro Pacific Capital, one of the first people to call the housing crisis and talk about coming weakness in the financial markets. But as we start 2009, to the victors, I guess, go the spoils. There's been some controversy last week. There was a blogger who wrote a critical piece about you. The Wall Street Journal followed it up with a story saying that you might have been right about the big picture, but your investment thesis was wrong because you were short the dollar and long foreign equities, and they've actually done better in the last 6 or 8 months or so. What is your response to your critics?
Well, it's only wrong if this is the end of the story. If we're cashing out at the end of 2008, which we're clearly not. I mean, I'm not a money manager. I don't have a fund. I own a broker-dealer, and I help clients make long-term investments. I'm a value investor. I'm a buy and hold guy. I look for dividends. Sure, we had some clients that were speculators. We had clients that were short the market. They made money in 2008. We had a lot of clients that only owned gold. They made money in 2008. But the bulk of my clientele are value investors. And so I've been buying them stocks around the world. I've been buying them good dividends. I've also been buying a lot of stocks in the natural resource sector. These types of stocks did extremely well from 2000 until the end of 2007, even the beginning of 2008. So clients that were following these trends did a lot better than people who were investing in U.S. stocks. Ironically, as the problems first began to manifest in 2008, we got this reactionary counter-trend rally in the dollar that not only undermined foreign stocks, which are priced in other currencies, but also undermined commodities. And so companies that were foreign and in commodities kind of got a double whammy from that. And so a lot of my clients who are owning these stocks, if you measure their account just based on what happened in 2008, many clients were down substantially that year.
Yeah, the journal's quoting people down 50, 70% last year. Is there an average rate of how your clients performed?
Well, they weren't.
How did your own accounts do last year?
The journal basically showed 3 clients. 2 were down about 60%. 1 was down 35%. And of course, none of that shows what they have in gold because the gold deposits are held in a separate account. You know, it's hard to say. We can't talk about performance because all the accounts are different and I don't manage them. I would say that anywhere from 30 to 50% declines, not counting what people might have made in gold during that year. Now, some clients who experienced those declines after experiencing 5 or 10 fantastic years, whereas some clients who just came to Euro Pacific Capital and opened up accounts in 2008 or late 2007.
Your notoriety has gained. I'm sure you've gotten more client accounts coming to you saying, hey, this Peter Schiff guy sounds like he knows what he's talking about. Here's some money.
Yeah, but the game isn't over. I still think that all of my clients who are down now, right, are going to be better off because of this decline, because most of my clients didn't have 100% invested. They didn't send me all their money. They got, especially the ones that got started in 2008. So clients have a lot more money to add on the dip, to take advantage of this phony rally in the dollar. So they can use those strong dollars, temporarily strong, to buy more foreign stocks and to be better positioned. Plus, all of my clients are getting a lot of dividend income. Most of my clients don't need those dividends, so they're able to take advantage of the drop by reinvesting the dividends on better terms. I think the real reaction is going to be a collapse of the dollar and a resumption of the outperformance of foreign stocks, which has actually already happened. If you look at what's happened with foreign markets thus far in 2009, they're dramatically outperforming the U.S. market. You know, most of the foreign stocks that I've been watching and buying are anywhere from 20 to 50% above their lows. But the point is, when you mark my accounts to the market based on the depressed levels of these shares at the end of 2008, if anybody would have sold them, they wouldn't have gotten a lot of money for them. But fortunately, my clients are not leveraged, right? They're not on margin. They're not selling into these crazy prices. If anything, they're buying. And ultimately, by the time my clients do sell these stocks, if they ever sell them, they'll do a lot better. It's kind of like, Warren Buffett, his approach is you buy stocks and you never sell them. You hope to never sell them. Right. And, Berkshire Hathaway is down 40% in the last 13 months. I don't see the Wall Street Journal saying that Berkshire Hathaway Warren Buffett made mincemeat out of his clients.
Right, absolutely.
Yeah, I mean, you got one down year.
Right. I know you don't want to talk about this, but Mike Shedlock, who writes Mission's Global Economic Trend Analysis, he's the blogger who, first wrote about you critically. He wrote that Schiff has made no allowances for being wrong and had no exit strategy whatsoever. How do you respond to that critique?
Well, I don't think we need an exit strategy. My accounts were the exit strategy. My clients are trying to get out of the dollar. My clients are trying to prepare for a major collapse of our currency. So why would we want to exit our insurance policies? Why would we want to get out of our euros and our Swiss francs and our Japanese yen and our precious metals to get back into the dollar? I mean, I didn't think it was worth the gamble. Sure, it's very easy in hindsight to go back and say, this is exactly what we could have done if we were traders. We could have sold it.
Traded out and come back in.
Yeah, but, you know, how do you know? I don't want to take refuge. I mean, you could tell somebody, you know, you might have life insurance. And you say, you know, why didn't you cancel your policy last year? You obviously didn't die. You know, why don't you just cancel it and reinstate it? You just don't know. I thought the risk was too great to try to time the market. I'm seeing such a major catastrophe that I'm trying to plan for that I wasn't going to tell my clients to cash in their insurance policies because maybe they could get back in at a more opportune time. I would rather take advantage of the decline because I know my clients have some dry powder. I encourage people to keep some dry powder just for this eventuality. And I know my clients are getting a lot of dividends that they don't need. We take advantage of that opportunity. And look, I think a year or two from now, none of my clients are going to remember the fact that 2008 was a down year.